Good morning, everybody. Let's go ahead and get started. It's 7 o'clock. We got a couple of wedge alerts that we've had. I think the U.S. CAD is still a viable one. So let's go ahead, and I know people will be dragging in. It's the Wednesdays, so I know they'll be dragging in here as we continue to move forward. But let's go ahead and go through our disclaimers real quick, and then we'll turn it over to Al to start doing some coaching. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. A high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. And again, this room is for education purposes only. No financial advice or recommendations are going to be provided to you. Any trade that we may take, whether it be on our demo accounts or live accounts, is not any sort of recommendation or suggestion that you should do the exact same thing. Past performance is not indicative of our future results. And then just know, as you trade, you want to have a written trade plan saying, okay, this is what I'm going to do to enter. These are what I'm going to do to exit. My targets will be these, and this is my risk management, trade management while you're in trade. Have those things written down prior to ever entering a trade. Al, are you ready to share your screen and get going?
I'm ready to roll. Go ahead and let me share.
I'm going to stop sharing mine, and you can take over. There you go, bub.
Okay, let me see if I can get my, there we go.
And we've already had the rubometer. The rubometer is already short the UCAD, so that
yeah. Actually, I like it short better than long, but we'll see if today ends up better than yesterday. Yesterday wasn't an amazing day, so.
Let's see. I'm probably not sharing yet, am I?
Yes, you are.
Am I? Can you see my screen? You see my use CAD? You see a red line in the?
I do.
Okay. I wasn't sure if I was sharing. Okay, here's what I'm seeing with the U.S. CAD. One thing I'm going to note right off the bat, we have news at 10 o'clock. So therefore, at that reason and that reason alone, I'm going to hold off on this unless I see some reason where I can't keep my finger off the trigger. It was a ace at 7 o'clock. We had an ascending wedge. Now, when I drew this, it had to be, I had to come all the way up. Basically, there was very little ascending of anything that I saw with this one, because this looks like it's going into a down move. However, if I come back here a little bit further, I really scrunched the chart up quite a bit.
You also had, Al, just so you're aware, there is a descending wedge at 515. So you had two of them back to back.
Oh, I didn't see that one. Okay, that could make a difference. So that would.
Ruben's probably the descending one, my bet.
515 at 515.
Yeah, it's 6:15 your time, I guess.
6:15. Okay, 6:15. Let me make my normal wedge alert here. Let me move this out of the way. And that was at 6:15. Okay, so that would actually almost make more sense. The ascending one didn't really make make a great deal of sense to me. It was over one more. But one thing I did
too far out, man.
Yeah, well, that was the 515. But one thing I also noted is that in order to get when I was first looking for this strength, what's ascending? Where can I get a hit? I had to come all the way back here, which means this is a pretty strong trend line. And if you're drawing this trend line from all the way back here with the hit, or here where I have the A, I had to move the A up just to draw a little bit closer. There is a significant trend line coming in right here before the alert. If we have the before the news announcement. So I'm just going to keep this green line on just for a much higher time frame reference. And this goes back from 1, 2, 3, almost 4 days ago. And so I'm going to please keep an eye on that green line while this thing breaks. But as I keep in mind, we have news announcement here. Here's my A. Here's my B on this trend. I had tucked my D in, and right now this thing is sloping down. And this is my new wedge area just before the alert. So just keep that in mind. If you want to take the trade based on this, one thing we've noticed yesterday, especially it was yesterday, I think it was, we had a lot of news announcements, and it was hard to get the range off of these alerts, getting our 7 pips even after it breaks the wedge, because it was waiting on news before it actually tended to break. But anyway, we're looking at this thing to possibly go short, so I'm going to go on my 1 minute chart. This is just the way we usually do, but I just want to throw those things out there for some reference to everybody. And so I'm going to tuck there's my C right tucked in there. And here is my B up here. Or excuse me, my D. And just to keep it, these yellow lines I'm drawing here, those are some range references. Those are where that's where if it breaks the wedge, it's got that far to, like here's the top of the wedge. It's only got that far to go before it's going to, before you're going to run into some problems here. And so you're only looking at, there's about 10 pips there. So there'd be enough room to get your 7 pips of that one. And I've got the same range marker down here for the where the A started, and you've got 23 pips. So that's good for the downside. There's still some time before the news announcements. We still have a couple hours. So here's so we're going to mark our 2 pip zone, and I'm going to take it, slide it from here to here. Slide this right, put that right on the line, put this one right on the line. And I'm going to come over here and I'm going to grab it, check my distance, so 62.1, so I'm looking for 60.1, right about there. Here's going to be my entry zone to sell. And now we wait. Let me going up to the top part. Again, I'm just going to use this for a reference. And then if I don't just mark this reference if I can, see if I can put a little tag in there on that. I'll just say, we'll just know that this is a reference line. This is the top of the wedge up here. And the main reason why I'm doing that is because it was such a long time frame trend that was broken right inside of our wedge. And that's what brought my attention to it. 96.6, so I'm going to 98.6, right about there. Template, and we're going to make this our entry zone to buy right there. And now we wait and see what happens. It looks like it's trying to come down and challenge us a little bit. I would say at this point, go and get your chart set up if you're wanting to take this trade. I may take a little bit of a hit at it, we'll see. Right now, everything is green, red there. So all my whole moving averages are all red. My Canadian dollar is showing it's strong to the down, strong. The Canadian dollar is the second currency of the pair. So when it's strong, we're looking for a short. Going to come over to our 15-minute chart, and we're going to check and see what our RSI says, our RCS tool says here. Canadian dollar is strong. The Canadian dollar is strong on the 5-minute. Make sure I have these time frames right. They do. So right now, the Canadian dollar is showing strength on all 3 time frames. I've got 3 whole moving averages that are all red. And the last thing we want to check and see is where our fib lines may be, just to get a reference of possible target areas. We're right at we crossed over the blue, so we're looking at a red here. So right now, if we get, by the time it crosses this red line, which is this red Fibonacci supply zone right here, if it breaks that and closes, we're looking down to the green. This will be our 7 pip area right in there. And let's get a potential target set up to go short. Let's get a target zone.
While we're getting this set up, Al, if you guys are having problems getting into the room, just remember this, because we do this every day, there's a different registration link for each day. Keep those registration links for each day kind of off to the side in a folder or something, Monday, Tuesday, Wednesday, Thursday, and Friday individually, because those will be the same. You don't have to re-register, but except for each individual day. So I'm in the back office still trying to get people to find out where we are. So just know that you're going to have an individual email sent to you on the day that's the room. So
Yeah, because we're special.
yeah, I've got a word for special, but know there's
Yeah.
some confusion. This is really our first full week, so they're not used to having to sign up for different days.
Yeah, you do get a notification, though, an email that says, hey, once you register, it says, hey, there's a session. Get ready. Come
Save
see.
that one. Yeah, save that one. And we're
That's the
doing one
one you
tonight
need.
as well.
Yeah. Today's a big day.
Today's going to be a long day, but a good day.
Yes, yes. I started to take your advice again, Brian. I've got 2 accounts now
Yeah.
because I find myself wanting to overtrade. So
Yeah.
I've got one account that I take a 0.01 on. And I'm exploring something. I'm just going to let it run until the 30-minute hull flips
Yeah, that's a good idea.
See,
at
we're seeing getting a lot-
0.01.
We're getting a lot of movement activity on this. Even 1 minute candle, it just bounced off and bounced out. Just did a real quick low bounce. That means there's, as soon as it came down to the line, it found some buyers.
Just got to break the C.
Yep, it's got to break the C, get into our zone. Should still show some strength, and then we take a swing at it.
Oh, I pulled the Brian this morning. I tried to move your chart, Al.
Yeah.
Because my chart looks exactly like yours.
Oh,
Even the wedge.
It's confusing.
And it's such a problem. So I've only got like 3 monitors, and on this one, I'm trying to move the chart, and I'm wondering why it's not moving, and I was getting frustrated.
I'm gonna unsync this one here. I'm just gonna unsync this and take that one off, just so we don't have any confusion on our 5-minute chart. But remember, this is the top of the wedge. And right
It
now
stalled hard.
It stalled real hard right in here.
Yeah. I'm already in this on my small account.
I've been in it for a while.
Oh, okay.
Yeah.
Oh, you took the Reuben.
Well, the wedge, my wedge is a little bit tighter than what Al
Okay.
did, and so it already broke. It gave me pretty much a head fake and moved against me.
Hmm.
And
Okay, I can see that.
Then I just did a trend line like Al teaches and said, okay, if it breaks above that, then I'll get out, and if it doesn't, so it went a little bit further than 7 pips, but it stayed within the trend.
You can see, like right here on the 1 minute, it's got here's a high, here's a low, here's a lower high, lower low, lower high, lower low, right off the bounce off the wedge. So it is forming a little bit of a trend right in this area. You can just see it's a very, very tight little, kind of like a flag pattern, I guess they would call that one. But you had a little drop. You had a drop. You had a little basing right in here. So if I do get into this trade, I would be looking at my stop being my first point of stop is going to be probably right at this candle, right, the red top of the red candle on that one. That'd be probably the beginning of my stop zone.
And what he means, guys, I don't know who's all new. Who's new in the room? If you're new, just put a Y in the chat box. If this is the first time you're here, because if you're brand new, you may be kind of going, "What is all that?" I'm seeing most everybody. I recognize. I think most everybody's name, so you're going to understand what he's talking about. He keeps a hard stop, but he likes to. So Julian's new. So what he's doing is he's putting a stop zone. So what he likes to do is when price comes in there, then he'll do an analysis. Does the picture change? And if it does, then he'll close out for a smaller loss than the hard 7. Some flexibility is what it is.
Actually, if I get into this trade, my hard 7 would be right up here where my stop zone is. But if it, but we're not in the trade yet, so that's one point. And you can see, like right now, if I got in right here, where if I wasn't waiting for it to break the bottom of this wedge, you can see that I would be just about stopped out. Right, if using my 7 pip stop, I'd be just about ready to hit my stop. That's one reason why I like this. There's a little bit of a trend line here. And so I want to keep it above the strong red candle that came down. I figure that there should be some sellers up in this region. Actually, I may want to see if I can pull this up a little bit more. This would be my 7 pip beginning. This would be the end of my. That's probably about 10 pips right in there.
And if you look at the left of that where we have a drop and then a nice little hump and then a drop and a hump. It's the same thing happening twice. It's just going lower. So you have a sharp downtrend and then you have a nice flat one too from the previous. You see what I'm talking about,
Al? Say that one again, Brian.
Go to your left. Keep going. Keep going. Keep going left. Keep going. Keep right there. See how it bounces off that blue, goes up to the green, and comes back down, all the way down to the new low. And then it goes up to another new high. If you connect those highs with the trend, you have a more shallow trend as well.
Yeah, it's see how it's respecting these little fib lines that we have now tied up.
It's almost the same identical move, up and down, lower though. So that's why I stayed in it a little longer, is because it's almost the same identical move. So I wouldn't be surprised at all if we have another kind of a hump look, ebb and flow.
Yep. So there's like a little bit of a hump and a lower, a little bit of a hump and then a lower.
I would have loved to seen it go a little bit lower on that one though.
On this one, yeah. This one is just about the same right where my C is.
Mm-hmm.
Let's see something here. Where's the, my A is down here. Okay. My A should be, that's way over here.
Yeah, you're in another zip code over there.
Yeah.
Another country.
But obviously it's valid still.
Yeah, for sure. But this is not really wedge so much. This is not the 15-minute alert. This is going over like way back there, right?
Right. Yeah, the 15-minute alert is, should be tucked in a little bit closer, but I just needed to see where that was because one thing when I noticed before the alert, you can see where it came down and came right up and tested that trend line. And that's why I think this thing has some power to the downside, because that major trend line got broken and was retested. So, and that test is before the top of our wedge. So I would not be surprised to see that be a significant area. Again, it's just the same information, just on a higher time frame. And the higher time frame you are, the more valid and the stronger the information becomes. You know, been just enough, if you got into that, been just enough to get you 7 pips negative and maybe take out your stop. Right now, it's still looking, it's still respecting this little area right in here. You can
That's
see this
why
is like this is a drop. It kind of based a little bit, came down, now just retested that base.
That's what I like about adding, a stop zone, right? A breathing room, so that if it does come up there and there are other indicators, then you can kind of play around with it a little bit.
Yeah.
You don't need to take the stop out.
Again, if you have a fast trigger finger like me, that's zones are nice. That entry zone's nice. It kind of calms me down.
Yeah, I need to. I need to keep my head occupied while I'm trading. I need to do other stuff because I overanalyze and I get too deep into it, and I will kind of override my initial analysis, which my initial analysis is generally all right, except yesterday. But yeah, I overanalyze and I mess up, so we'll see what happens.
Actually, I'm looking at this thing. My C should really be up here because this was before the wedge. Let me just double check this a little bit here.
Are you doing an ascending or descending?
Well, it was an ascending wedge on this alert.
Yeah, the latest one, yeah.
The latest one, and there
I'm
really
still
was
on
no.
the early.
Yeah, and there was no little hits or anything. But that was, if this is my low point, and here's where the wedge was, that's as close as I could tuck it in, and actually, so that changes the picture just a smudging.
I kept my descending.
You kept the so you're still working with the descending, yeah.
And
I really did not like this ascending wedge on this overall. I didn't really like it because, in fact, I'm just going to go ahead and keep this D down here because that's a significant price point.
And that happens to be the same line on my descending. even though you are good
Not
at ascending.
surprised.
It's the
Not
same.
surprised.
It's where you guys are it's where it's crossing actually.
Yeah. Which again, the more time you have, more confirmation and more different angles to look at it, the stronger the point is for reference.
I would really like to see this drop a little lower.
Today I have to be out of here at 10:15. I need to go get my teeth cleaned. So.
You're good. We're done by 9:30.
Yeah, we'll be done
Oh,
by
we are?
9:30 this
Okay,
morning.
yeah.
Yeah, today's a 9:30 day. Susan has her
Right.
thing at 10.
Right. That's what I thought on the schedule.
Mm-hmm.
I'm still getting used to the schedule because there's
Me too.
like it's all in my my Google Calendar now. At least I can have a better idea and plan it out. But the wife is, 32 weeks pregnant, so sleeping's a challenge.
I have it all in my BTE calendar.
See,
Yeah,
And
brain.
Brian's working real hard to get me to upgrade my calendar.
It's
Well,
not the
it depends what country you're in. There are solutions for that.
Yeah, I'll tell you, I'm still trying to get used to some of this, all this extra. I mean, I've been still looking at charts over years that all this Google and Facebook stuff is just, it's kind of, I didn't use Google Docs or Google Drive or Google Calendars. I just didn't need that stuff. I'm finding myself to be needing it more and more all the time. So
it's
I'm
not
having
the
to
schedule. I have a
adjust.
problem. It's where I'm supposed to be. That's the problem I'm having. It's not that I know I'm doing things all day long. It's which room am I supposed to be in at what time?
Yeah, and how do you get into that room?
And how
Because
do
it's
you
a
get
different
in
access. We are living in the age of information overload, and I'm trying to streamline the overload part, because what happens is I'll look and I'll see I've got 400 emails, and there's no way I'm going to go through and read all these 400 emails. So I have to just sort of eliminate the main ones I know that are, and then I have to, and I think what happens, I probably eliminate some that I shouldn't be eliminating, but they just get kind of caught in the mix.
I just got the Auvoria Prime 10-minute warning that we're starting. They're a little late today.
Or maybe we're early.
Yeah, could be, I guess. Not late, we're just early for the next time.
Are there any other questions while we're waiting for this thing? Now's a good time.
Yeah, now is a good time. It's quiet today. Quiet today. Everybody's just locked in.
Let me see. I actually need to just notice I need to get some of these turned on here.
Do.
And one more. I have several different things I look at, and there are only certain ones that I feel comfortable showing everybody. So I have to kind of adjust my chart. So I have to have two different setup of charts so I can see everything I want to see, plus also show what I need to show.
Yeah, my computer died. So sorry I bailed on you guys.
You're good.
I upgraded my RAM, so now I've got 2 times the amount of RAM. Computer runs like a shark on steroids.
See, right now I'm really glad I didn't try and push this a little bit. I was waiting for that break. Now, if that would have broken, I still probably would have been. It still would have been a little bit of a challenge on this one.
This is a good example of why you why you wait for it to break the wedge before you actually take the trade.
Now, this is a pretty hefty sized wedge. If I look at my 5-minute chart, we can see that from where it is right now, from the bottom of the wedge to the top of the wedge, we have a nice little zone of about 27 pips, which is a nice little range. And so keeping that in mind, that I mean, we could be going, it would not surprise me to have to wait all the way till the news before we actually get a break of the wedge. But you also see that you have like a little bit of a trend line inside this wedge. And basically, here's the point I want to make too, is you see these two yellow lines. That's basically your A-B range, or in this case, the AD range. So this, prices are going to go one of three ways. It's going to go up, it's going to go down, or it's going to go sideways. Well, even though it's trending down here, it's trending inside a sideways range, inside the limits of this upper bottom. So next from to D all the way, and if you look at that, it's really going sideways inside this. So you have to be, so I think what's important is to realize that when it gets up here, it's probably going to run into a little bit of a problem. When it came down here, it's going to run into a little bit of a problem. And you don't want to be taking this thing right in the middle, because if it's in the middle, that's the level of indecision between these two ranges. So you want it to be to one extreme or the other before you take a position. Either wait to take it in the extreme when it breaks out the top, or you look at it at the extreme when it's going to break to retest the bottom of it. And so right now, our wedge is basically making that determination for us.
And you have a, excuse me, you have a question in regards to, can you see the whole wedge? They want you to zoom out.
Can I see?
Like you need to see the whole wedge so they can see where your points are.
Okay, let me go to the 15-minute chart.
15-minute. And then while you're doing that and you're zooming out and showing that, Ruben again is asking to go quickly over the correct EMA orders for short and the correct orders for long.
Oh, okay. The EMA order? Okay, yeah, that's going to be this thing right here.
And he said, what should the order be? If you're short, it should be green, yellow, orange.
Yeah, green, yellow, orange, or green, yellow, whatever 62.
And if it's long, it should be green, yellow, orange on the other side.
Yeah, it's going to be green. It's going to be green, yellow, orange, no matter whether you're going up or down. But you want your green to be the leader of the pack. The yellow should be in the middle, and the other one should be at the other extreme of the green. So as you see, if it's coming down, your green is going to be leading the. It's going to be your front scout, basically. And so right now you can see where this thing's it's crossed. Now you have a 30, a 15, a 13, and a 5. So everything right now on all 4 time frames are all in the right order to go short. But I would also expect.
Zoom out again so we can see that wedge as you're talking.
Oh, zoom.
I don't know if she's got
like this way.
Yeah, we want to make sure we see all the whole. Yeah.
So right here, I've got my A set here at the 9:45. This is East Coast time, so make your own adjustments. 9:45 low. The B, we could probably put the B up here. We do have a little bit of a trend in that regard, I believe. I think I moved it down because I had it a little bit. Yeah, this is still okay. We'll put the B at the, actually, I'm going to take this one off. This is where that 6 o'clock wedge was. I'm going to take this one off so it doesn't confuse anybody. The B was at the 3:30 this morning. I've got my C tucked in right at this actually ended up being the close of that candle at 7 o'clock on the 1-minute chart. And then my D is, so I've got my B, here's a hit, here's my D, which is right at where my 30-minute moving average was, which just kind of, I'm sure that was by accident.
And just know all that triangle
tool.
Yeah, the triangle tool is just drawing lines for you, the trend line. You can do it manually if you want. This is just a nice way to be real precise. That's all it is.
Yeah, and the other thing is, what's nice about this triangle tool is it tells you if you're drawing it, if it goes into the wrong direction. And so if I can't get it to draw where the point comes to the area where we don't have chart yet, then, I mean, the points should always come to the right side of where the price is. If you have it where it's going backwards, then something's just not quite right. And then I'll keep playing with it until I can get it going in the right direction. Or I don't take it, or I don't draw it at all. So does everybody catch this times here at 8? The A is at 9:30 on the 13th, which was 2 days ago. My B is at the 14th at 3:30. And I said this, I drew this pretty far back, mainly because it was significant. It was asking for an ascending wedge, and the only way to get anything ascending really was to pretty much go all the way back to that. But this is a significant point. The D to these last 2 points are what's really most significant about this particular wedge. One is the closest in trend, and it also was able to give me the reference point at the end to be able to get my hits.
And I would just tell you guys, if you have to go back that far normally, if you're a newbie, don't.
Yeah.
Hal's been doing this for a couple months now, so he knows what he's looking for. I would have put my A at the next pivot, right where his line is, all the way to the left, where down to the left, straight across. That's where I would have put my A, a little bit over.
Oh, you like the flat bottom.
Right there, flat bottom. That's where I would have put my A. But I wouldn't go 2 sessions back.
No.
I wouldn't do that. But he's aware that there's something going on at the 35.50 area or 35.40.
Yeah, and also the other thing is that I know with this news coming out, this area is going to be, if this news has any significance to the price, and if this thing breaks, it's going to come right down to here. More than likely, it's going to come right down and retest this little region.
Because that is the origination of the entire move up.
Right. From 3 days ago, this is where it started, and now it's coming down to retest that area. But I would also expect to see it pop up and then come back down. So that's why this wedge, I want to make sure that with this news announcement, I want to make sure there's plenty of wiggle room in here before I get into this trade.
And Rob's asking, what's the ABD? What is this? That's just your triangle tool. Can you show him where your triangle tool is?
Yeah, it's just triangle tool's over here.
Yeah.
And basically what all it's doing is when you click on the point your A, it gives you your second point, it gives you another point, connects those, and then you come back with your. So all it does is give you three significant points to reference. And like I said, I always like having the AC part have a little bit of a hit in between with prices, and between the B and D, I like to see some sort of a hit. As you can see, like right here, my B to D area, I've got a little bit of a hit here. I have another hit here. That the more hits you get off of this trend line, the more significant the trend line becomes. As you see down here on this A, this one I didn't like this was so much because from my A to C and have it be ascending, which means I need to have my A down lower than my endpoint. Mm-hmm. There's nothing to hit here. There's absolutely no reference to a ascending. The only reference I can get is if I come all the way over to here. And this is why I drew that one initially, because I'd like to see a hit reference. And this was as close as I could come right here. And that was within just a couple pips. So of where the ultimate, see, that's when I had my, if you see, if I connect the C here, I can see if there's a hit here, and I come over here before my yellow line. If I can catch the lowest low before the line, you can see where this came very close. So that would be a nice, and that's why I really like this. And that's the one that I drew with the green trend. But normally speaking, we can draw it within the day's range anyway. Like this was the end of yesterday's range. And that's one reason why you can probably bring this one down up to here, because this was so right now this was near the close of yesterday, and it's just we had a little basing that, then we had some movement coming down into it. And this is where I mean, a lot of this stuff is still subjective, and when you have like an ascending wedge within 3 or 4 candles, that doesn't give me a lot of reference. It's just not. I'd just like to see a little bit more.
Now you must have adjusted your
Yeah,
Okay,
well,
great.
yeah, right there. I have it. I mean, that's where I put it. But that was that 1 minute candle that came all the way down.
Mhm.
And so I'm going to keep that as my reference for on this particular trade right now.
On one
If you
account, I've made.
if you guys are actually sharing screenshots and stuff, make sure you put it in the chat so that
Right.
we could actually click on it and view it. If you put it in the question Q&A section, we can't click on it, so I'm not going to manually type out the end of trading view, the EH16 whatever. It'll just be easier.
Yeah, Rob, we do things completely different than Susan. We are in very much precision entries. We're going for 7-pip zones, small risk, maximum position sizing, not aggressive, but very, very precise and mechanical. She just does it a little bit different. She uses RSI heavily. But we are looking for breaks on the 1 minute for a precision entry. So it's not far different, but it is different as far as stylistically. And
Yeah, because
you're
we're going to
probably not as
enter.
lost as you think. It's just you haven't seen the tools that we're using. Give it a little bit of time, and this will make all the sense in the world to you.
It will. Instead of, see, Susan likes to, actually, most people will enter a wedge trade on the 15-minute chart. They'll wait for a break of the wedge at the 15-minute. To simplify what we're doing is we're actually taking that 15-minute wedge break, but we're going down to a lower time frame so we can get that break at, say, a 5-minute candle or a 1-minute candle, which gives us significantly more pips than what you would erode waiting for that 15-minute.
He says he hates the 15. Yeah, so you're probably one of those ones that need to gravitate to the Hawkeye. That's why we call it Hawkeye. Is because it's not necessarily a faster system. It's just a more precise. And I'll post the Telegram channel here in the chat box for the Hawkeye. That way you know when and where we are, because Bill with Auvoria Prime is going to be posting the announcements and schedule and things like that into our Hawkeye Telegram for you.
Yeah, no, that's awesome, and I think you're gonna really gravitate towards this because you were saying you've already been scalping on the 1 minute. I wouldn't call this scalping. I would call it more precision. It's being very
Precision day trading.
specific. Yeah, we're
Precision day trading.
doing precision. We're not looking for. We don't have a high stop loss, right? A lot of people that have to scalp are using a risk to reward that is just ridiculous.
Just ask, what I would say. I know you've loved. It's not Airis that's the that would be your issue. It's how are you trading Airis? Airis is giving you pretty good alerts, and you can ask a majority of people that are in the room that have been with Al any length of time. The results we're having are insane. So it's just kind of refining what your thought processes are. I'm a trigger happy guy, so I have to be very, very careful not to jump in too quick.
I can tell you from my experience in trading in the Forex over the last 3 years and about 4,000 hours of chart time, that I haven't seen anything like Airis. Airis is absolutely unreal when it comes to the accuracy of the wedges. Now, there are very specific criteria that we use to enter and qualify a trade, but if you're not using, like, before we put this whole Hawkeye together, we went back, all of us, and we drew wedges. We drew hundreds of wedges, and we saw patterns and commonalities and things that were repeating itself. And then what we did is we found ways to maximize what was happening on the chart, and we found it going down to the 1 minute and using these RSIs and using the Hull moving average for exit will get you very good results. Well, that's a really good observation. So what that means is I'm going to have a question for you, and it's going to be very straight. It's going to be, how many wedges have you drawn? If you can't see them, then it's my humble opinion that you haven't drawn enough. The first 50 wedges that you're going to draw, it's going to take you a little while to do them. But after you get past 50 or so, you're going to get to a comfort level where you're going to see wedges on wedges on wedges, inside wedges, and you're going to be sleeping and dreaming about wedges. Once the point that you get to 400, like myself and like Brian and Al, you've drawn so many wedges that
I can't get out of it. They can't get out. I do a swing trading session on Monday.
I see them.
I see them
everywhere. And they're there, and they're trend lines, man. They're trend lines on steroids, and Airis gives you the best ones. So my recommendation to you, go back into Airis's archives. In there, you're going to have like, what, 600 or 700?
If you go back to April, it's close to 600.
Yeah, you got 600. 600 wedges. Okay? That you can go back and you can draw. And because you're not putting any fancy indicators or nothing, back testing this is fine. Go draw them. And don't break the wicks, okay? Don't break the wicks of the butt, and do not under any circumstances cut through the body of a 15-minute candle. You can draw, what would you say, Brian? Probably about 85% of them you can draw without having to cut any wicks or anything.
If I have to cut it, I don't draw it.
Yeah,
no, I disqualify it.
Yeah, I would say that I oftentimes, but more often than not, I like to see just a slight little break of the trend. Like, here's a good example of this right now, what we're talking about. Remember we said I didn't have a real good reference for my A to C? Well, I just got it right here. When this thing came down, that was my third. Here's my first point. Here's my second. So that validates this AC trend line very nicely. And this is actually, here's A was the anchor, C was the first hit, here's the second hit, here's the third hit of this trend line.
Now, understand, those who are new to the room, Al, we get the alerts on the 15-minute, okay? You draw your wedge alert on the 15, you draw your wedge on the 15, and then Al will go down to the 5 and get it a little tighter. Then he'll go down to 1. I just drop immediately to the 1, and I get it as tight as possible, putting my C as close to the wedge alert as I possibly can get it. And very, very minor adjustments from that point on. Usually I won't even move anything as far as my wedge, and I let it go.
And my guess is, Brian, your wedge probably looked a little bit like this initially when the alert came out.
It was very sharply down.
Here was probably where your C was. Here's a hit, and here was your ascending, so it was going slightly going.
Yeah, I was even up. It was a descending, so I had to. Ours was descending at 515, so it was very sharp. And so I am sitting. Let me see where I'm sitting in my wedge right now. I think I'm right on top of right. It's basically the same spot you are, but different wedge. So I am in the middle of my wedge right now. My descending wedge, right smack in the middle.
Yeah, there's wedges on wedges on wedges in there. Like, you can see another wedge there. You can, when you drill down to the 1 minute, as soon as you find 2 bottoms, draw a trend line. Or 2 tops, draw a trend line. It might overwhelm you after the first couple times, but those trend lines are very interesting. You can see he could potentially draw a trend line from the third top of that run down. And that third hit on that trend line, that's a valid trade at a lower time frame. A third hit on a trend line, solid.
Always, and you know what? Again, we put a lot of weight on when Airis gives us a wedge alert, and we see other wedges within that wedge. The main one we focus still on, even though we're paying attention to the ones that are within, is the Airis one, because it's using non-emotion. It's not subjective. It's not what's my perception. It is giving you a clear indication this is a strong area based on mathematics.
Well, not only that, but it's also looking at the smallest time frame. It's looking at as a 15-minute time frame. It's looking at 15 minutes on higher, like to an hour, 3 hour, 4 hour time frame before it made its decision. It wasn't based on a 1 minute chart, I don't believe.
No, it wouldn't. Well, price is on the 1 minute, but I believe that it's using either a 15-minute chart. But pretty soon we're gonna find out exactly what it's doing, because I'm gonna find out when that's releasing. But they're gonna be sending us the pictures in our alerts now of what the actual system's looking at. I just can't wait to see that.
I just don't think I'm going to change.
No, and I don't think so either.
I mean,
but it's going to be.
But it'll be interesting to see how close we are.
It absolutely will. Now, Rob, reach out to me on Facebook. I will talk to you after. Okay? After my dentist appointment, say 11:30, 12, just hit me up and we'll talk, okay? Oh, this is Matt Pino. You'll find me. It's Matty Joseph. I had to change my name. So anyway, long story short.
IRS issues.
Yeah.
You don't have IRS, by the way, up in Canada?
Yeah, we got Airis. No, we got the oh my goodness, the CRA, the Canadian Revenue Agency.
Okay.
And so, but we make sure we take care of them. You know, the one thing you do in life, okay, totally outside since we're waiting for a break, okay. One thing you do in life, find yourself a great mechanic, okay, and the other thing, find yourself a great tax guy. If you don't have a care to learn how to do it yourself properly, find someone, pay someone to do it so you can go to bed at night properly, go to sleep. And when you get these scam calls, you know they're full of junk because you've taken care of your business. Make sure you pay your taxes properly, guys. The one thing you don't want to be doing is, especially in the Forex, no one ever talks about this very much, right? It's always a taboo subject. But make sure you pay your taxes on your Forex gains and whatnot. Because if you, I've seen this before, okay? Because my background is in banking. I've worked for JP Morgan for a while, and a couple of years. And something I've seen people do is they'll take out 10 grand cash, except their day job doesn't support a $10,000. You know what I mean? Their day job doesn't support a $10,000 gain, or they're driving a car that their day job does not afford them to drive. You're going to be red flagged, especially in Canada. They're going to start looking at you a little more intensely. So looks like we got some action going on.
How would you please let this thing break down so I can be done?
I don't think it's going to break down a whole lot before 10 o'clock.
Don't.
It's really fighting here.
But you can see it's making lower highs, it's making equal or higher lows, actually slightly higher lows.
Getting coiled up.
It's just getting coiled up. And this is when you're looking at these wedges, I usually I'll start with a high, I'll start with the low, and then I'll look for a lower high and a higher low. And that's my starting point oftentimes when I start the wedge. So if I'm just looking at like this area right here, unless I didn't have a wedge drawn, I would be looking at this pivot high, I'd be looking at this pivot low, and then we say, okay, where's the next lower high, significant lower high? Well, that'd be right here. Where's the next significant higher low? Well, that would be right here. And so there's my wedge. And if you start, when you look at drawing these wedges, if you just start doing that first, just see where the alert is, go back until the previous high, the previous low, and just start from that point. It doesn't matter whether the B's ahead or below. I mean, I'm always say if it's descending, I always start my A up here, but that doesn't mean my B can't be behind it. But then you're looking for a trend line with a hit somewhere in the middle. Like here would be a hit almost. That's very close. So here's a high, here's a low, here's the high, higher low, lower high, and I could see. Okay, now does this high, lower high, is it lower than this, and is it this one a near hit to this trend line? And there's now my trend. Now you can see where this one near hit. And this is on a 1 minute chart, but that's usually how that's the first thing I look at when I start drawing these wedges. I look for the previous high, previous low, and then look for lower high and a higher low, and then start from there. And then just work it until you get to where the alert was. Maybe that might help some people to be able to identify these things a little bit.
Ashley, I see your hand raised. If you want to type in the Q&A, if you have a question, I don't know why your hand's raised. Same thing with Julie. If you just post your question, we can address it to everybody. I don't mind.
Oh, yeah. And if price breaks
Usually, if
out,
you have a question,
actually,
everybody else does too.
yeah, no, that's cool.
Now, if we get a close below this little yellow dotted line, if we can get a close below, that means that we got a close below the previous low. I prefer to see it with this off the C, but this is just a reference of this is where it came very close to. But here's where my C is. This was the ultimate low, and still made higher lows, higher lows. Now it's starting to break. Now, if it can break the C after one hit, two hits, this would be the third. This could be right here. Could be the move that we may be looking for to get into this trade. Now we're going to look and see where our trend line, where our strength is. We have the CAD strong. The CAD strong by 3. The CAD strong only by 2 on the 15-minute.
What a mess.
So
see right now you can't. We do not have a close below this area. We don't have a close below the trend mark between the wedge, and we don't have a close within this 2 pip range of the wedge.
So to answer your question, when we get an alert, how long do we usually wait until I enter or we enter? Generally, we're going to wait as long as it takes for it to break the wedge. So in some circumstances, it's like 2 minutes or even 30 seconds. And sometimes it's up to like 2 hours. But it all depends, right? It's when it breaks the wedge at the lower time frame. And you're about to see how we would enter a trade. Now, this one's taken its dear sweet time, but
having said that, once it breaks and once we get into trade, our average time in the trade is about 21 minutes.
Which is really good money, guys. Like you
just might have to wait an hour before that happens. Or 2.
Right. Even in the future, just think of it this way, okay? Whatever you're doing now to get 2% a day or 1% a day or 0.5% a day, just wait a couple of years down the road when you've got some significant capital and you're able to duplicate this because you have a volume of these trades and you know what this is going to do. You have your general idea all set out. So make sure you interrupt me, Al, as soon as
yeah, if I said I will.
Okay. So yeah, 7 pips is our general target, and Al and Brian came up with 7 pips. I loved 5 pips, but then I realized that I was getting stopped out or missing my target by like 1.5 pips or 1 pip because of the spread.
Yeah.
So I was getting spread out.
Yeah.
And even though we say 7 pips, that is what we shoot for. But I'm perfectly okay going with 10 pips if the chart price action tells me that I need to give it a little bit more room. So I mean, we say we want 7 pips, and that's usually our starting point. But that doesn't mean that that's so hard and fast that you can't go to 10 or 11. But just keep in mind, if you go with a little bit bigger stop loss, then you may want to just decrease your lot sizes just a little bit to help compensate for that.
So our lot size in the trade is completely dependent on what our account balance is, because what's more important than your lot size in the trade is your risk to reward ratio. And if you don't know how to set that up yet, and have proper risk to reward or proper lot size, position size, we have a really cool tool that's going to help you, and you're going to see it right here.
Channel. Yeah, that's in the Telegram channel.
Yeah, that is in the Telegram channel. And then you're going to see, because it could have been a direct question of how big your account is. That's the interpretation that I had, because every time your lot size is directly correlated to the balance in your account.
So this, again, this is just this is our tool that we use to determine that. So if we're on the, in this case, we're on the US CAD. So we're going to, this is the old version. We have a new version out, but I haven't switched it over yet. So we have the US CAD. So we're going to come over here to the US CAD. Whoop,
and you just keep an eye, because you're breaking again.
Yeah, I see that.
Who knows if you're breaking? It's just doing the same.
It's coming.
This US CAD, and there's that, and we have our PIP value for the US CAD is $7.09, and we have 2% risk. That's $10 of risking with a 7 pips risk. If we change that to 10 pips, it's still going to be $10, and you're going to see that if you have 10 pip risk, our lot size is 0.14. If I have 7 pip, it's going to be such a small difference that I don't really worry about it. It's okay. This case is 0.2. So if you have 7 pip risk, you can take a 0.2 lot size. If you want to move that to a 10 pip, yeah, it's going to be a 0.14. And then some question: if you want to keep on changing, I'm going to just accept that difference if I have a 10 pip. Or you could just set up for 10 pips regardless, and then just take a smaller lot size, but you're still only risking $10. Either way, you're risking $10. Whether it's
and the difference between that and the other one is you're making 60 cents more with the 7 pip stop loss per pip than if you're in with a 10 pip stop loss. So when you compound that out and you let the magic of compounding do its business, it's a significant difference. So in my book, it's worth learning to trade with a tighter stop loss. The more value you can put into your PIP, it's controlled by your actual lot size in the trade.
So we call that our profit regulator. It's basically what it is.
And when we hit that percentage, we're pretty much done for the day. We'll go to demo. We'll get out alive, protect the profits we've had, and be done. That way, if we feel like we have to overtrade, do it in a demo.
Or a tiny account. I've got an account. I'm messing around with a small account right now. It's actually pretty fun. I don't even have to worry about it.
As Brian said earlier on, when he started trading, he was trading for candy bars. And then as his account grew, those trades were for hamburgers. And then as that account grew, it's like for a dinner out. And
nice
if it's as that account grew, it's like dinner out with your wife, and so
Valentine's Day.
Valentine's Day, and it's just that candy bar grows into a hamburger, goes into a nice dinner, it goes into a vacation, it grows into a lifestyle. But you have to start. But you have to. There's a book out there which I highly recommend everybody reading. It's called The Slight Edge. And it's what it does is it talks about the power of compounding, and the power of compounding is as some of you may or may not know, if you take a penny and you double it 31 times, you're going to have over $1 million. But you're not going to do that unless you start with a penny. If you don't start with a penny or a candy bar, you're never going to start compounding. But it takes the discipline. But what it does, you create that discipline that you need to accept those small wins that seem very insignificant early on, but as time goes on, that's what seems to be insignificant as it starts to compound and starts really kicking up steam. It makes a huge difference. If you take a penny and you compound it 31 times, after 20 times, you're still only at about a $5,000 account. But those last 10 days of compounding that penny every day goes from 5,000. Those last 10 days, it goes exponential to where it's over $1 million. It's just what seems very insignificant in the beginning is hugely effective later on. But you need to develop that trend. You need to develop that discipline to be able to make that happen.
And that doesn't come overnight. And that comes from doing the same thing over and over and over, so that it becomes so monotonous that you can take a wedge trade and not have any emotion connected to it. It's just going to be subconscious. And then you're not going to have to check, oh, is this that? Or consciously check, oh, this, what's your RSI doing? What's this doing? It's going to be just on autopilot. But that comes after a couple hundred trades. But that's the goal, right? And that's why I like wedges, is because you can do something the same way over and over again with anticipated outcome. 65%. Because of our risk reward, we even Al's got documented proof, and his documentation is just standout about what this system can do in 30 days. And about a trailing stop loss, I'll be honest with you, I don't use it. I will take myself out of the trade, or I'll monitor it. I'm not gonna go in that route. I just don't like the guessing of it.
The only time I'll put a trailing stop on is if, let's say, I take one that's trades like in the evening or even during the daytime, and I can't sit and watch it. After I'm in the trade, and I say, okay, something comes up, I have to go. Then I'll put a trailing stop on. But I usually have a trailing. I'll usually use like about 15 pip trailing stop, and I'll just say, well, whatever happens, happens. I'll try and get it to where it starts trailing to where I should be close to break even. Worst case scenario. But I mean, there may be some times I say, okay, I just want to let this one run, see what happens. Then I would probably put a trailing stop on, knowing that the worst case scenario is I get to break even, but best case scenario is maybe I can catch a 20, 30, 40 pip move.
Exactly.
That's the only time I ever even think about using a trailing stop. Normally I'm just sitting here watching.
You do
And
now
that's
have a NZD alert on an ascending.
NZD,
exactly what I was about to say.
And NZD is another one of those. Just keep in mind, just so we know, that NZD has some news. There's the 15th, and here on the NZD at 6:40. This is later on tonight. We have some NZD, but just keep in mind that we have a red folder event at later on, pretty much at the New Zealand's.
It's not an easy wedge to draw. Let's put it that way.
So go ahead and let's.
And I'll watch your CAD.
You watch the CAD, and I'll draw this one as it speaks. NZD USD is over here, and I'm going to take that off. I'm going to make this just one chart, and it was we have the alert was an NZD 9 o'clock ascending. So I'm going to come over here. I'm going to move this over so I can see what I'm doing. I'm going to take this one off. NZD 9 o'clock ascending. So here's my vertical line, put it at 9 o'clock, ascending. So I'm going to start at the bottom. Again, I'm going to be looking pretty much for the last significant high, which is basically right here, last significant low, all within today's range. This is where yesterday closed. So this would be the significant low from where this thing started. So I'm going to see if I can't find a trend somewhere. Now this is going to be a real sharp. This is going to be really sharp on this one.
Now,
if it's ascending. See, I kind of like. I would probably like to start this thing, although it's a little bit further back. See, I want to see if I can get a couple hits. Like here would be a hit, and here would be a hit. So I'm going to start with A, B. It's ascending, so both of these are going to be kind of going in the upside here. So here's our upper trend. Here's our lower. I can slide this one over a little bit more. And then there's the secondary part would be from the C to this little area up in here. Let me just slide this one over just a little bit more. Just to tuck this in as close as I can. And this would be a significant, I'm going to kind of draw a wedge inside of a wedge just because this thing's so steep. And I'm going to tuck this in so they all kind of line up together right up here at the end. Come to a 1 minute chart.
This is a pure wedge. Wow.
Tuck that one in right there, tuck this one in over. So basically right now I've pretty much have a wedge inside a wedge. The reason why I'm doing this is because this one was so steep from the other part that I liked. It was just too much. If usually if it's that steep, there's usually another wedge available someplace else. And I'm just going to try and tuck this one, find this D. I'm going to tuck it in over here. Try and get all those points to line up together. Here's a break. We're on a 1 minute chart right now. Here would be a target area right over in here because this is where my A is. So I'm going to take a measurement, see how much room I have. So from the break of the wedge to down here, we have only 4 pips. So do you want to take a trade where you're looking at 4 pips to your first target? For me, I'm not going to take that, but we're going to pay attention to it anyway. But this is the way I would probably draw this wedge right now. I could only take the C up to this point. It's ascending. The top part's ascending as well. But right now we're getting a little bit of a break. And this is going to be, if you were to take this break, and you have had to be really quick on this to be able to catch this. Now let's see if we can draw our 2 pip range here. So from here to here, and we're going to measure 2 pips. And that's going to be from right about, that's 73.8, so 71.8. 71.8, right about there. This is our 2 pip range break. You can see it came right in. Now it's retesting that. And if you were to go and if you were to try and take this thing short, like so this doesn't fit my, I'm not real. So you can get in right here. Get our 7 pip range. Here's where your target's going to be all the way down here. So it's going to have to break through this B and it's going to have to come over. And you can see where actually there is a little bit, this is where this last move started consolidating or started taking off from way down here. But this part was retested before it went up higher. Come over here, take the top of it. Now this is the main wedge that we're looking at where the B is. Because I'm going to make this one as a secondary wedge. I'm just going to color this one a little bit different.
I like the idea of putting a secondary wedge in there, Al, especially if it's that big.
Yeah.
That's good.
Yeah, I think, like I said, this was so steep that it just didn't seem. And I find that usually if I take it real steep, all it's doing is going to whipsaw me oftentimes.
Yeah, because there's not enough width in that wedge, right? You're so narrow.
Correct. So I'm just going to try and just sort of eyeball this thing to about the center of my zone. This is going to be my entry zone to sell. Now you see it did come in, it broke it, it came back up, it tested this wedge right here. Here's where my alert was. If you want to take a shot at this, you could take a shot at New Zealand. I might take a small position on this one, very small.
Yeah, I'm not taking a big position. Mine's tiny.
It's not to say this won't work out. That's if I get a red candle close. I'm gonna wait for this minute candle. I'm gonna wait for another 23 seconds. oftentimes if I'm looking at the clock over here, I'll look, and if I see where I'm going to be getting in, I might lead it by 5 seconds, the close of the candle by 5 seconds. And this is a 5, this is a close of the 5-minute candle. I'm going to go and take it short for, I'm only taking like half my normal position on this. Let me see if I can do.
Can't get them all, man. You can't
Nope.
get them all.
Excuse me.
See if I can, yeah, probably won't be able, my trading platform up here so I can, okay, now I'm set up here. Let's see where our ranges are on this. Right now, the dollar is showing strength on the 5 and the 1. Looking for to see what the strength is on the 15-minute chart. See, New Zealand's showing strength on the 15. The higher time frame, where the strength on the higher time frame has more significance to me than the 5 and the 1. I use these for pullback references. That one right back up into this. Again, this is one reason why I like using these the higher time frame wedges. This is a very aggressive entry using this upper wedge here. In fact, I'm more inclined to think this thing's going to break the top of the wedge as opposed to this to be a pullback before it breaks the top of the wedge.
Yeah, there's a couple confirmations for it kind of breaking up to the top more than the bottom, at least at a little longer of a time frame. The 30-minute 62 exponential moving average is really the middle of the road in the Forex based on a lot of back testing and whatnot. And it's underneath the underneath price pretty significantly, which means that vast majority of the time, I'm not talking in absolutes, it's going to push price up. If it's on top, then it's going to push price down. It's pretty powerful anyway. But beyond that, there is a whole lot of upward pressure. So we'll see.
Now, Ruben, I think it was Ruben that was asking about the area of the exponential moving averages. You can see the green, which is the fast one, green, yellow, which tells me that this thing has more pressure to the upside than it does to the downside.
So I will enter my trades on my phone. I will do my analysis on my computer. I do not do any analysis on my phone. I do have a stylus that I use on my phone, but it's just too frustrating to get the lines right because we're doing precision, right? These lines have to be on point. If I'm entering on the 1-minute chart, I can't slice through. We need to the pip tags for it to be a valid entry in the vast majority of cases. So I'm not taking those trades on. I'm not doing the analysis on my phone, but I'm taking them on my phone, if you know what I mean.
Now you do see that where now the dollar is stronger on the 1 and the 5, strong by 3 on the 5, still showing weakness though compared to the New Zealand on the 15. Now, if we can start seeing where this thing flips to the dollar strength, that would give us more support to the downside on this.
Your whole moving averages are mixed though.
Yeah, we just got a red bar on the 15 on the 1 minute. So we're red on the 15, the 5, we're still green on the 1. If this 1 turns red, that gives us some confirmation that we may be okay going to on the short side. But
Yeah,
right
but
now
did
you
it
can see where, no, it didn't close yet.
No, okay.
And you have a new Airis alert, 8:15, ascending Euro US.
Ooh.
So many alerts.
Yeah, tell me about it. We're not going to get through all these. Our session's done in 15
15
minutes.
minutes.
Minute.
Yeah, 50.
Well, what do we do here? Do we just draw them up and
Yeah, we can draw this up real quick so people can see how we're going to draw them.
then let them
How's our CAD
roll, I
trade
guess.
doing? Our CAD trade is still fighting it.
Yeah. Busted out of the top really nice, but
The bottom of
coming
wedge
back.
held, but it's still, I see, you still see. Look at that green line I showed you, that main trend line I showed you earlier on. Look where it bounced right off of that. That's significant.
Very.
So we have a next alert was a Euro US 915. Let's just, we can draw it real quick before we go.
But
When it's
overall,
ascending, we start from the bottom.
Euro
Yep.
US, Euro US, Euro US.
A little lower. There you go, bub.
There you go. And we're going to take this off. Take that off. Close the chart. 915.
oh, this is a nice wedge. Oh,
Yeah.
this is nice. This is very nice.
Ascending or descending?
Ascending.
Ascending.
Okay, so here's a nice big move up. I'm going to use this pivot to start with. So we'll come down here with my triangle tool. I'm going to start here. I'm going to come up here, tuck it in, take it up. There's our wedge. Take it over the 1 minute. And I'm going to tuck this in right here. I have a nice little hit right here. So here's my A. I'll bring my A over. Near hit here. Here's a nice hit. We bring the B up over just to take it as tight as we can. I don't know if I can take this one, use that one. And maybe can I slide that over there a little bit more? We've got it. Yeah, this is good. B. Here's a hit. Here's my D. Here's my A. You said ascending right. Wedge. It looks like it wants to break out to the upside. Here's the euro is getting strong over here on the 1 minute. Let's see what it is. Click on the euro strong, euro strong, euro strong. Not with a lot of spread though. It's still fighting the bottom of it. Now just went up to the 3. This one's looking a little bit better.
Mixed reviews on Hull.
And we got, and so if we have the break, take my trend line, get my 2 pip area here.
This small account is really fun. It's really fun for my head. It's really exciting. So I might try something crazy and take my 2% out of my main account and put it into a smaller account and just play with that.
Main thing is to develop a entry zone to buy right in there. One thing about is you want to get, my goal is to have consistency. That's my main goal. I'd rather have consistency with small money than having non-consistency with large amount of money, because once you get consistent, that keeps your head straight, that keeps you want to trade like a robot. You want everything to be just like it always like, and find out what's going to work for you. And then once you get that consistency, you get that confidence, then you can start using bigger money to be able to trade your account. See how our New Zealand's doing. Still not doing much there.
CAD has dropped like a rock. Back down.
Yeah, it's been good.
Back down to the bottom again.
Yeah, so we've got a couple, and also look here, look how close we're getting to our news announcement. So that's going to start, maybe that might be significant, especially the fact we got so many other news alerts. Here's a break on the 1 minute on the Euro US. I want to see this candle. I want to see a blue candle followed by a small red candle, and then a blue. Then to get in sometime in this zone. I can move my B all the way up. This didn't quite make the top there. We have the whole moving average is saying it's green there. Let's see.
There's your break.
Euro US. And I am as soon as that candle turns red or blue, I'm going to be in. I'm in.
I like you like how that ended up, right? It just broke the wedge a little bit, came back, tagged it, and took off. That's a move we see very, very often, and that's a significant sign that the trend is reversed.
Here's my target. Here's my entry. My stop is down here at the bottom of the wedge, all the way down here.
So, Christine, specifically, that's why we use the entry zone. When it breaks through the wedge originally, the vast majority of the time, it's going to come back and it probably will tag the wedge one way or another before it makes its huge move out of there or the bigger move. If it does break out of the top and doesn't come back down and we missed it, then we missed it. But don't go chase it. Don't go enter late. If you enter 3 pips late or 4 pips late into a trade that's going 7 pips, you've already lost like half your potential profit. So it's really not worth it at that point.
See how it came in? It tagged it, and we're still looking for another blue candle. You don't want to enter on a red candle.
Right.
And you don't want to enter when this thing, don't want to enter long if this thing's saying that the dollar is stronger.
And we got news coming up.
We have news coming up in
7 minutes.
Yeah.
Yeah, that's whatever's going to happen here. It's going to happen pretty hard. So we'll see what happens.
Notice the news says bullish breakout above double top at the 113.50. So that's way on down there.
Personally, I don't put a lot of weight into what they say.
I don't. I'm just aware of it because it's like Kramer. People watch him and they go, oh, he's got great stock advice. Yeah, he's got great stock advice to push the price where he wants it to go so he can get out.
Of course.
Cat is breaking. It just got below the low.
Oh, just before the news announcement.
Mm-hmm. I just need another 3 pips and I'll get my 2%.
Nice. I closed one of my UCAD positions.
I closed one that was closest to price. I got break even plus some. Got out of it.
I got some profit.
The CAD is showing dollar weakness. The Euro US is showing dollar strength. Or it was, anyway.
We got 5 minutes left in our session today. This day flew by.
Yeah, it was too fast.
Gosh, we didn't even really get into any sort of advance with the technical tool.
No, really, we didn't. But that's okay. But yeah, Rob, our goal generally is not 2%. Our goal is to end the day with the same amount of balance in your trading account or more. And we'll take what the market gives us specifically. So, for example, we use 7 pip stop loss. We aim for 7 pips for very specific reasons. We didn't have a chance to get deep into that, but come back tomorrow or even this evening. Is it this evening or tomorrow evening?
Tonight at 9:30 Eastern. We have an
Okay,
evening.
yeah. So we got an evening session, and we'll probably have the opportunity to go over why 7 pips and why we like 7 pips. There's a lot of advanced things in why it's 7 pips that we like to target.
On our drier days, the days we don't have 3 or 4 alerts within an hour, we really dig into the tools that Al's not showing. We wanted to keep when you're doing trades and things are happening, you really don't want to be trying to explain what your indicators are in the middle of a trade. You rather just let price action be price action.
Yep, that is exactly how I feel.
You really don't need the tools. I mean, you've got the wedge alert. You really don't need extra tools.
It's just additional confirmations to increase your odds of that trade going in your favor. Like yesterday, didn't matter what tools we had, we got whipsawed out. I even got whipsawed on a tool that I've paid significant money for, and and that's why I was a little bit upset yesterday, where I just took a 2% loss, and usually I don't let the stop loss go all the way as far as it is. But I thought it was going to do something else, and it didn't, and I broke my own rules. So when you break your rules, get ready to pay the price for that.
Here's what Euro US. How's our Euro US doing? It's still sitting there. Euro's still strong. Euro's strong, barely. It's right now they're fighting for last place, pretty much. I think at 10 o'clock when this thing breaks, it's going to break hard either way. New Zealand, that's starting to break to the upside. Dollar, New Zealand strength, dollar weakness. The CAD is showing, the euro is showing dollar weakness. The CAD is showing dollar weakness.
Yeah,
So
and be
New
careful
Zealand
not
with
too many at one time.
So if you're short with the New Zealand, you may not want to continue with that one because that's showing dollar. You're on the side for dollar strength on that. I'm going to close that trade out. I took a very, very small position on that. I'm looking more for this, say, for the dollar to get. I'm looking pretty much for dollar weakness.
I was actually long on the Kiwi. I still have a tiny position open, but I might. We'll see what happens.
But I have my stops, I have my targets in, and whatever happens, happens. Because whatever happens is probably not going to be fast enough for me to do anything about it other than let my stops and targets take it. Right now we got 3 green bars on the whole moving averages on the euro. We had the break. It's still basic. You can see where it's just finding some, just basing inside that area. Let's see where our Fibonacci line. It's right here on this red fib line.
Right on top of it.
Right on top of it.
That's why. I was thinking, why is it not moving?
Yeah, it's not moving much at all. It's dead.
If it breaks, it's probably going to go up to this 1450 area. This would be, which is right where our target is.
What do we got? Another minute? So now we're going to see some movement in all currency pairs. So whatever happens, this is a significant close. So got 30 seconds.
And it's 9:30.
We'll give it a minute before we shut down today.
Yeah.
Don't forget, Susan has her session here in about a half hour. Again, just a different perspective. Always learning. You can take things from anybody.
But we have our wedges, and now you can monitor your wedges whether we're here or not. You know what we're doing. We know how we take it, and we know where our targets are. Right now, the first target for this Euro US would be 1450.
Now you've got all three whole moving averages on the euro.
U.S. CAD is still sitting there waiting to see what the news is going to give it. And with that, you may see a real sharp move down, and it may bounce right back up, or it may have a sharp move up and break down. This was more of like the sharp move up, but it's still this area is still not breaking. It's still not very convinced that it's going to break to the downside.
I went ahead.
US seems like a little bit better option right now as far as the trade goes.
I'm just a little over 2% for the day for that now, but I'm also euro, so we'll see what happens. All right, Al, we got to shut it down, my friend.
Okay, all right, everybody. We'll see everybody tomorrow. Good luck with this trade if you're in it, and we'll post the results as the day goes on here if we can see where we have something to show anyway. So
thank you so much for coming in, guys.
Everybody have a good day.
All right, God bless you guys. Take care.